Welcome back. It's time for today's earnings exchange. Retail and tech are driving the narrative today in the market, so let's get a read on three more names in those sectors reporting after the bell. We've got Costco, Dell, and MongoDB. Joining us for the trades is Nancy Tengler. She's CEO and CIO for Laffer Tengler Investments. Nancy, great to have you back. Welcome.
Thanks, Kelly.
Let's start with the favorite, Costco. And it's like a broken record saying it's hitting an all-time high, but it is again today as it's set to report third quarter earnings after the bell. Analysts over at D.A. Davidson will be watching food inflation, how that's affecting prices, whether they're increasing their investments into e-commerce, always a growth opportunity. What's your take? You still an owner here?
Yeah, we do own it. And, we've trimmed it back on strength, and it is expensive. I mean, the stock's trading at 45 times next 12-month earnings. I've often said if I had bought more Costco stock instead of, the major runs we made when the kids were your kids' age, I'd be super wealthy. But I think what you want to be paying attention to is they are taking share in consumables. So sorry, Target. And the company is growing e-commerce at a rapid clip, not as fast as Walmart. So we'd like to see some guidance there. And then I think you have to step back and say, it's pretty hard for this company to have any more multiple expansion. I mean, Costco is expensive even by Costco standards.
Right.
So I think if you get weakness, you add to it. And if you get a run up in the stock, it would probably be prudent to trim it back.
You wonder if they're going to do a split at some point. The PE, the one we're showing is almost 50, and the stock price is $818. Maybe it should go in the Dow.
Yeah, well, that would be nice instead of some of these software companies, at least on a deal like today. And they also have that special dividend, which last year was $15 a share. Don't do it every year, but when they do, it's really quite handsome.
So the run-up has really even been more impressive than it looks. That's really interesting. All right, so sticking with it, maybe looking for opportunities to add. Let's move on to Dell. We mentioned it hasn't been a great day for software, and the stock is trading somewhat lower into the print, down 4.5%, but it's been on a 260% run in the past year. B of A is looking for more AI offerings. Announcement on a potential PC refresh when Dell releases first quarter results this afternoon. Talk about hype and expectations with this one, and a fun Renaissance story as well.
It is, Kelly. It reminds me of Microsoft after the 10 years of wandering in the wilderness for Microsoft. This is a company that's in the sweet spot of the AI hardware story. They have not only servers, but we'll be listening for is storage recovering and guidance on PC margins. But I think the street may be underestimating the PC upgrade cycle. If so, I think this stock could continue to perform well. It's trading at 23 times next year's earnings. If this is a secular tailwind behind the company for many years, that is not terribly expensive. Free cash flow is growing. Capital allocation back to shareholders is quite attractive. So on weakness, I think you add to it. And if you don't get a big pop, I think you still add to it. Wow. Just watch, pay attention to NVIDIA and how that stock has acted after earnings reports.
Meaning in a good way or?
Yeah, so you get a sell-off, but then historically it's been wise to step in. So right. I think that's what we'll be doing.
That's a great. No, it's Dell's back, Microsoft's back, Denim, Abercrombie's back. It's like this is my sweet spot. I understand this world. Okay, let's move along to MongoDB, which is actually down 20% year to date, but a lot of analysts covering the stock still have a buy rating. Stifel is watching for updates on licensing deals, revenue for their Atlas database. Are you watching this one, Nancy? What do you do here?
Yeah, so I think the real problem that this company has faced is that 2 years ago, year and a half ago, Atlas, which is 63% of revenues, Kelly, they went from a subscription model to a consumption-based model, which is kind of the opposite of what a lot of software companies have been doing. And there was a slowdown in consumption demand, a macro slowdown. So I think what I want to hear from management is what their guidance is going forward, because frankly, the experiment has not yet worked, and Wall Street's not the most patient. I think that's why you've seen the sell-off in the stock, and it is trading at a ridiculous multiple. So, they've got to deliver, otherwise they're going to get clobbered, I think, after the report.
All right, look at that 130 PE. You can get, just go pick up NVIDIA. Nancy, we have enough time, just give me a quick sense of how you're looking at the markets at this juncture as we head into the summer.
Yeah, I think we're seeing a slowdown. I mean, I heard people read the Beige Book yesterday and say they thought it was very optimistic. What I heard and read in it was that things are growing, they're just not growing as fast. And so, you were talking about earlier about the B of A guidance. I think we are seeing a slowdown. The labor market is rolling over to some extent, or at least softening, and wages have rolled over. So, we're at pre-pandemic real wages, but lower than pre-pandemic real wages, and wage growth is back to pre-pandemic levels. So you got to watch the consumer, and you have been. So I appreciate that. Yeah. The high end, I think you stick with us. Baby boomers do have a lot of disposable income, and you stick with the high end on the consumer side of things.
Interesting. That's more tempered than I've heard you. Like, got to come back and we'll expand on it. But I appreciate you letting us know. Nancy, thanks for your time today. It's good to see you.
Thanks, Kelly.